Good morning, traders and investors. It's Wednesday, April 9th. Lots going on the charts. I've been away the last couple of sessions, but the markets are moving exactly as we expected. Gold, silver, stocks, Bitcoin, bonds, oil, all that stuff, the energy space, international stocks, everything is moving exactly as I've been mapping out over the last couple of weeks, actually the last several months, depending on the time frames we're talking on. But lots going on to cover today. Over the last couple of days, I was at the band Mute in Ottawa, which was a pretty amazing band. Went with my best buddy, and these guys are absolutely epic in terms of performance. It's like progressive music, but all brass, and these guys just absolutely rock it out. If you haven't heard of these guys, you've got to go check it out. And went with my buddy Danny. We got front row center on the balcony. You can actually see us too. We actually saw a video online this morning where it shows us two standing there. We got front row. Totally epic concert. So if you haven't heard these guys, you got to put them on. They're just as good entertainment to watch as they are to listen to. And they sound exactly like they do in their videos, exactly live. It is crystal clear. Anyway, let's jump to the charts. Let's take a look at what's going on this morning. We've got some interesting price action. The tariff volatility, obviously, I was talking about don't pick a bottom a while ago, and a lot of people are picking bottoms. It's caused a lot of damage. The market has collapsed, and we've seen a huge pullback, and you really don't want to mess with this stuff. There are times when you want to hold stocks and times when you don't. Of course, we are in a non-favorable market environment. If we take a look at the markets right now, you can see here, we've had some nice trades hitting some targets on the way up. Our last trade was on the QQQ. On a portion of our portfolio, we took about a 3.3% loss, which when you look at the grand scheme of things, it has saved us over 20% loss, and why we need to rotate in and out of this market. And we have learned it usually takes about 8 months for people to see the value in what I do. Anyone can make money and throw all kinds of hot trades out during a bull market, but what it comes around to is when the brown stuff hits the fan, do you know how to protect yourself? Can you avoid crisis? Can you avoid big financial losses? And that's what we do. We not only outperform the buy and hold by about 3 to 1, so we triple that, but overall we also protect you and actually can make money during a falling market and avoid stuff like this. And unfortunately, most people get sucked into trading all the fast-moving newsletters and stocks and all that stuff, and then they give it all back on one trade because you just don't have proper risk management. And unfortunately, this could be the start of something pretty ugly in the grand scheme of things. So let's take a quick look at the SP 500. Let's go to the weekly chart. There's some very big things playing out here. I'm going to go through this fairly quick, but let's just dive through here with Fibonacci extensions. We have the COVID low. We have the high of 2022 before that little baby bear market. And then we have the pullback. And if we carry that forward, we obviously get our upside targets for the markets. Now we hit the 618, which we know, which I shared in a Fibonacci extension video, how to use Fibonacci extension. If we hit the 618 and pause, we're pretty much always going to go up and test the 100% level, which is the 1 level. We've hit that and it's been completely rejected. We put in a little triple top, it broke down, and now it is collapsing to the downside. Now, if we were to zoom in on this on a more recent time frame, let's go to the daily chart. If we take a look at the daily chart, we can go to the most recent pullback and the strength of the bounce and carry that forward. You can see we came right down to the 100% measured move. It has blown through there, tons of volatility. As Brian shared, if you watched yesterday morning's update, we have broken a whole bunch of these lows. We broke this low and we broke this very significant low. Brian's another technical trader. He runs our options trading newsletter at the Technical Traders, and we've broken these significant lows, which is where huge volume has kicked into the markets, and it's flushing out the stops. It's creating massive panic. The VIX has gone through the roof, and more or less, I talked about this last Friday, saying, hey, because the market's closed on a weekly basis at the low, I'm just going to go pull up the SPY. Because the market's closed at the low, I shared, we're probably going to see a big gap down on Monday. Everybody's going to say the bear market's here. They're all going to panic out. and then they're all going to expect lower pricing. And that's exactly what happened. You look at our emails, you look at the comments, you look at all that stuff. And I was saying more or less this is probably carving out a short-term bottom here, because now the whole world has just flipped the script and they went from picking a bottom to saying now the market is in free fall mode. Yet this is an exhaustion type of move. It's going to have some more volatility as it works itself out. But overall, this market, I do believe, has just flushed some major stops. And now the sentiment has changed to super bearish, which means we're like looking for some type of bounce. Now, if we look at the 30-minute chart here of our FOMO indicator, the bars are red, which means we are in a short-term downtrend. And we had extreme FOMO, meaning everybody was buying yesterday at the opening bell. They all piled in thinking the bottom was in from a short-term standpoint. This is just overall a short-term kind of move. I'm just going to put this daily chart back so people can see this. So yesterday you can see a big gap higher. And if you look at the daily chart, it gapped higher. And then the whole day, once everybody thought they were trying to pick a bottom, who was going to pick a bottom, the sellers stepped back in and just crushed the price and sold it back down. So this is the type of volatility we're going to have for a little bit. There's obviously some mixed signals. There's going to be some bottom pickers, which is why we get this pop, but then it gets sold into. So expect huge volatility, higher highs, higher lows all over the place. Could last like that for a little while. And the big question is this a pause before another leg down? Or is this a consolidation of volatility and we see some type of bounce back up? And because it's really just a coin toss and one tweet could totally change the game, when volatility gets like this, we step aside, which we stepped aside a long time ago, avoiding all this and just collecting daily interest and dividends on the sidelines while the market collapsed about 20%. So there are times to step aside and all of that. Okay, so a lot of people have been talking about they want to get into, or they have been moving into international stocks. These are the major indices. If you take a look, the Dow, SP 500, NASDAQ, Russell, Nikkei, Euro 50, and the DAX. We have gone over this many times in our mentoring sessions every month. We go over this occasionally. All stock markets move the same when panic or FOMO hits. Either everybody's piling into stocks or they're all moving out. And while the DAX was delayed a little bit, it held its ground and slowly moved higher, it completely has flushed out with the rest of the market when there's panic selling. And this is why there is no safe haven. When the stock market is in a bearish vibe or a short-term downtrend, we don't want to hold any stocks. It's just a matter of time. If one drags out longer and holds a bit of value, it's just a matter of time before it plays catch up and falls out of bed and hurts you. So again, the whole point of our strategy here, asset revesting, is moving into an asset class that is moving up. And if stocks are out of favor, you don't move to a different pocket of stocks. You just get out of stocks as a whole. And let's take a look over at overall the stages. I believe the stock market is still in this stage 3 topping phase. I believe we're working our way to a stage 4 financial decline, so a bear market and a financial reset, something much bigger than the 2022 pullback. I think we're going into that. When we look at bonds, I do believe bonds are in a bottoming formation. They're trying to work out a base. A lot of people are picking bonds and they're moving into it, but in the grand scheme of things, bonds are not safe yet. Let's go look at the futures here. I keep talking about how it is still dead money and it is volatile and it is sideways. And just look at this last price action. We have got, bonds have fallen, 8% in 2 or 3 trading sessions here. And it just goes to show, and I shared this last Friday, I think I said bonds could still fall 5 to 8%, and it could still take a year for them to build a base to actually break out of here. You can see we went from a topping phase to a stage 4 bear market. Now it's trying to carve out a bottom, but this could still chop around, and it could even go lower. It's still picking a bottom in the bond market. It is trying to build a stage 1 base. I believe we're in a stage 1 base, but nobody knows. And there was a really good comment the other day, because I shared in a video saying, none of us experts or so-called experts know, it doesn't matter how big you are, how well you're known, none of us know where a market bottom is or which rally is going to be the next big rally, which pullback turns into a bloodbath. That is why we have to follow the signals just like we did over here. You get in, you don't know if it's going to last months, and you grow your entire account. Sometimes it rolls over, you get out and you're like, oh, that sucks. But allows you to move around this market and avoid this type of stuff. And when we go and look at the major bull market cycles, you know, we've had some very nice trades from post-COVID, where we've had the market have these beautiful runs. We get into a bullish environment where the market moves up. We go into a bearish environment where the market had a big move down in general, but overall a bearish environment. And then we've got a bullish environment where the market moves up. You need to know if we are in a bullish or bearish environment. And of course, the market has changed gears from a long-term bull bear market signal, and you really don't want to be holding anything like that. So let's go and take a look over at gold. Gold is up 2.5% this morning. It is having a very big pop, which in the grand scheme of things, I've talked about how if you're going to hold anything in the precious metal space, it's just boring old gold. I heard the best saying the other day. I can't remember who said this. I was on a podcast and they were like, you got to get some of those gold pet rocks. Gold is the most stable. It obviously, most markets and sectors have pulled back 15 to 35%. Gold pulled back about 7%, so a lot lower volatility. Now it is having a nice bounce and pop up. So it's finding that traction. It got oversold here just the other day. Again, if you were to move into anything else, you're going to get hit really hard. Here are gold miners. May not look like much, but gold miners pulled back, 12 or so percent. If we take a look over at silver, which was an absolute bloodbath, silver has pulled back. I mean, it was down 22%. It's down about 15%. This is why we don't want to get involved in volatile stuff during volatile times. We want to move to safety. When things get volatile, we move to slower things. And if we take a look at the hot list, GLD is the only asset class that we have that is still, people are willing to put their money into it. They're not afraid. It does get pulled down during panic selling, which we all know. That's why in a bear market, we don't want to hold gold, because it will get dragged down. But we're in this phase where gold actually can be resilient, hold its ground, and actually move higher over the next several weeks, potentially, while the stock market struggles. So people are still willing to buy gold. The short-term trend is up and the long-term trend is up. Out of everything else is bearish, and you don't really want to be holding it. And that is the reason why we talk about gold and why it may be slow and boring. But if you're looking to trade something right now, gold is the only one that is actually in an uptrend. And if you want to add a little excitement to it, I've mentioned like you do a 2x on GLD, like a 2x gold fund, just so you get that leverage to satisfy, gold moving 1 or 2% a day. Doesn't seem like much if you're trading silver and miners. But overall, if you 2x the gold, you get the performance that you want with the accuracy of winning trades. So that's another perspective. Let's take a look over at oil. We've talked about how oil has this massive breakdown coming. We've been talking about the opportunity in the ERY, the energy space ETF. More or less, I shared if we break and close below this $65 per barrel area on a clean close, we're going to see the next level is about $56, $55 per barrel. And eventually the energy sector space, the stocks are going to get hit. And if we take a look at using Fibonacci extension, we hit this to the T as of really this morning. So we've got this move down, we've got this bearish pattern, and you can see this morning we hit the 618, had a little hiccup for one session, and now we came all the way down to this first major target. Massive panic selling. We've hit a target, and so we're probably now going to see, I think, the stock market, energy space, I think we're going to see everything have some type of bounce. Again, we're not picking a bottom because, as you guys know, it is a very painful, the bottom is not a bottom until it's in, and we got to let it build one and prove it. But I do believe we're going to see some type of bounce, and then I think we're going actually a whole lot lower with not just oil, but I mean stocks in general in most asset classes, including real estate and all of that. So a good example of this, we talked about XLE, which is the energy space, how it was putting in a major top sideways channel, how it was pointing to a downward move of somewhere about 20 to 35% to the downside. And this is exactly what we've seen. We've seen this huge move to the downside. We talked about it when it was up here. It's down about 18, 19%. ERY was the ETF that I'm interested in. Right now it's built the base. Obviously ERY, this is a leveraged ETF. It has already moved up that 40-50% that on that initial move. I do believe the stock market is going to bounce. Energy stocks are going to come down, and they're going to build a bull flag pattern. More or less, it's built a base ERY. I never chart with a leveraged ETF, FYI. I only chart with the underlying sector and then focus on this. But I think we're going to see energy stocks pull back. It'll actually build a bull flag, and as it starts to turn around, ERY could be a trade, and we see another huge move, another 30-40% move, easy to the upside for this. This is the trend reversal. Now we need to have that first pause and pullback, and then we can potentially play the inverse ETF for a huge move. Kind of like our Bitcoin trade. These are rare big trades that set up for imminent massive returns on the account. I just really like these type of discretionary trades. All right, let's take a quick look over at Bitcoin. I am flying through this. There's a lot to cover, and I don't want the video to drag out too long here. Bitcoin continues to be moving down. We've had the targets. We ended up playing Bitcoin. We got in right here. We sold some here at a 14% gain, and we sold 40% gain at the peak. Bitcoin's put in this double top. It has now created this downward move, which this breakdown from this double topping phase, we did the analysis a week or two ago, or a couple weeks ago. We've had the move down and the move up, and more or less, depending where we take this, we've got the move down, we've got this high. This was a Trump-driven move, which I'm not a huge fan of. I hate using spikes like that. We could actually use this lower level right here, which I believe is more of a normal level. We talked about 72,000 on Bitcoin being that next downside target. It's obviously had a drop, a bounce, a drop. It's paused here. It could flush out and go a little bit lower. There is a bigger potential downside move depending on how this market goes, based on this other move brings us down to about 56,000 to the downside. So that'll wipe out this whole previous move and bring it right back into this giant bull flag level. So there's, again, it is in a downtrend after a double top. If the stock market does bounce, I wouldn't be surprised if Bitcoin finds some traction and bounces. Remember, when the U.S. stock market bounces, kind of everything bounces. There's, we just have to be aware of that. You don't want to be betting against the trend. We're not picking a bottom. The key is on the sidelines, wait for the bounce, and the next leg down is where the opportunity is. That's the easier money, because sometimes bounces aren't really bounces. We could just see something trade sideways for a little bit and then just go lower. And there's not really any upside potential. And just like over here, instead of it coming down and then bouncing, it really just traded sideways, and then the second half of the move kicked in. So now that the trend is down for almost everything, it's not about trying to pick a bottom. It's about actually trying to spot a top, and then as it starts to roll over, take advantage of the leg to the downside. Last but not least, the U.S. and Canadian dollar exchange. I know we got a ton of fellow Canadians. When we look at the monthly chart, this is the monthly chart of the currency exchange. I still really do like this overall exchange. We've seen the Canadian dollar drop in value, the U.S. dollar drop in value. We've seen the conversion be very low. It's put in double bottom. It's now built a massive launch pad. It is flirting with a key resistance high from before. It's pulling back. It's actually holding up very well. It's had a little pullback over the last 3 months, but this is primed and ready for another big leg up. And I've been talking about a $1.60 to $1.74 exchange, meaning $1 US is a $1.74 Canadian, which is why I like holding US dollars still. I know everyone seems to be bearish on the dollar, and they have been really ever since I got into trading, 25 years ago. And everybody's always talked about the silver short squeeze. Anyway, that is all hype. That is all people waiting for some crazy opportunity. The key here is to follow price action. The reality is there's a long-term bullish trend in here showing that, if all hell breaks loose and oil continues to drop and gold drops, we go into a recession, Canada's going to get hit really, really hard, meaning the Canadian dollar will fall. We're tied very closely to resources. We're tied very closely to oil. Oil has broken down. It is now in bear mode and breaking down. So I do think we're going to eventually see this continue to take off. It's just been a little hiccup in the grand scheme of things. This is a little tight bull flag pointing to the next move, probably around $1.55 exchange. which will be right through the middle of this noise through here as it probably builds another little bull flag. But overall, all the markets are moving just as we expected. It is complete chaos and pretty darn random and volatile, which is why we're on the sidelines waiting for this market to sort itself out. Equities right now are down. They're all over the place this morning. They were down 2% a couple minutes ago, I think. They're having a little pop in the last 30 minutes, so we're starting to see them bounce back up. But stocks are really shaking things out, and there is a time to just stand aside. And it's one of the best plays that we have during this type of major market trend reversal. When we go from a bullish environment to a bearish environment, you don't want to get caught in this downdraft. Any bounce that we get in this market is probably going to be, it might drag out for a couple months, but it's probably going to stall out and then eventually go a whole lot lower. And I think we can see this market wipe out a lot of big gains, down probably 40-50% from the highs this year. And that'll wipe things out and create that opportunity to get into a lot of different assets. Anyway, hopefully I touched on most things that people are looking for, but again, just protect your money. That's the phase we're in. It's not about trying to make money in this volatile time. It's about trying to protect and keep your money so that you have it available when a good opportunity with a high probability shows up. Take care. Bye-bye.